Good morning, guys. Good morning, colleagues. Good morning, everyone from everywhere, all over the world. There was a request to explain that NASDAQ that I sent in the group, and I was asked to explain everything that's there, so I will do exactly that. Just now, I'll be quick. I won't take your time. Okay. I started this thing on a daily time frame, so I saw this break of market structure here in a bullish direction right here on daily time frame, and then again after this immediately I have to look if ever we have an internal structure inside this break of market structure here. So if there is an internal structure, therefore this will be our uh, macro structure. So this will only be visible on daily time frame. Yeah, this thing here. So again, we have to check what happened after that. We have an internal structure here. I can see this here as our internal structure. This here. Okay, so this is an internal high. Yeah, right. So it's this is an internal high. So pricely is likely to come and mitigate this internal high here. So where is that candle to be mitigated before we consider what's happening up here? So we have to check which candle is likely to be considered here. So it is this last up candle here. Okay, what's happening? Yeah, it is this last up candle here. All right, this last up candle. So when we pull out our rectangle to our right, we can see that price came just a little bit below it with this week this top hand week here, and then pushed a little bit up again. So however, we have to look only for buy opportunities because structure is broken into a bullish direction, right? So we have to wait for price to come here, and then we buy from here. However, we have to notice then what happened again here. We have another bullish breaker block here. So this again, it gave us it give us more confirmation that price uh we will still continue to go high. We'll buy NASDAQ more. Okay, so this we have 1, 2, 3 break of market structures in one direction. So this it certify us. In fact, it does not confirm. It only certify us that NASDAQ is very bullish according to this break of market structures. However, remember we said price need to come and mitigate here. Then it means that price will have to break this structure here. For it to come and mitigate this internal high, it means this structure will have to be broken no matter what. All right, so with that said, when now we have this break of market structure in a bearish direction for price to come and mitigate here, then this break of market structure, it is now invalid. All right, it is now invalid, so we have to put another line here that shows that price will come and break here. All right, so remember our entry point was here. We are still on daily time frame. And then what happened then? So now you have to remember that, oh, okay, I marked the break of market structure in a bullish direction, and now I'm marking a break of market structure in a bearish direction. So now this is some kind of a pattern. This is some kind of an entry pattern according to what I gave you there, guys. So now this is a high, this is a low, this is a higher high, this is a lower low here. So what does it mean? Then it means price must still come up to this last up candle here. All right, so price must still come up to this last up candle because we started to mark our high. So price must come to this um, first high here, uh, and then after that it will mitigate and then goes further down, and then we have now to mark that last up candle, and then when you add our rectangle now, as you can see now, this is what we call the change of character. So this is the same thing I've been explaining, that if ever if ever your structure is broken in one direction, check if price will break the second structure in the opposite direction. So this structure is broken into bullish, so this structure, this first structure here, was broken to bullish direction, so this second structure was broken into bearish direction. So this high here will be mitigated, and then our take profit will be this swing low here. All right, so this is all the concept of change of character. And then with that said, remember our target was still here. So with this swing low, our anticipation was priced to come and mitigate here and then push back to mitigate again this high. So this was a setup for a buy here to sell here. So however, price did not come here, but however, if ever we mark this, then we will be in the money for this. Okay, so again price pushed, it came again to this swing low here. On a lower time frame, we can see that you have a minor structure here, so these candles will be explained there. So after this swing low again here, price, let's see if it's an equal low or not. No, it is not an equal low. So after this swing low here, price pushed further up. Then when price was going up, it broke again this structure here. All right, so it broke this structure again. So what then is our point of interest after we see that break of market structure is this candle here. All right, this last down candle, this is the high, this is a low, this is a higher high. So this low here is our point of interest. When price comes here, remember again we have 1 2 break of market structures in a bullish direction, and then again now we have this low here, and then price broke structure. So what then do we do here? We're expecting to buy here, but price did not yet still come to this here, so it means that price will still sell here. So this will become our breakup blocker instead of it becoming a mitigation block. So as you can see here, okay, as you can see here, price came or this to this candle. Instead of us buying, price came to this um, internal high here. So this was our point of interest, and then finally it was mitigated, and then price push up a little bit, and then this high failed to take out this previous high, and then after that the new structure was formed, which broke this structure, the structure that started here. Okay, so this move up on its own, it's a bullish structure. Then this move down on its own, it's a bearish structure that broke this bullish structure. And where was it broken? In this week here. So we still have 1 2 3 structures that got broken into a bullish direction. However, now we have this break of market structure here. So always note that if the internal high is gated or violated, and then we now go to the macro structure, and then we check the low of that macro structure, right? So we check the low of that macro structure, or the high for a sell, but in this case is for a buy, so we have to check its high. Then this is the week here, so you know you know about the story of a week. I don't have to remind you of that now. So price came to it exactly with this first candle here. So I instead of us buying, so price broke this low as well. So what then do? We have to wait for price to come into this very same order block, and then we sell from there. As you can see, we now have this bearish candle that started just a little bit above this wick here, so it was a sell. But still, you have to check what do we have on the left. What do we have on the left? Will when price trade below this, what is the point of interest on the left? So when we do that, we see now that we have a break of market structure here. Okay, we have a break of market structure here, and then do we have another structure inside this structure that got broken? So that will be our internal structure, or microstructure. And then when we look here, it's another structure that got broken here. Remember, we are still on D1, so price is likely to come in and mitigate this internal high here. So what then do we do? We have to put this rectangle here, and then we pull it to our right. This, you have to do this after price trades below this order block. You have to quickly check what's happening, what happened on the left. Do we still have price that have not yet been mitigated? So when you pull our rectangle to our right here, so we see that this week came to this internal high here. So we have this break of market structure in a bearish direction, so we had to sell from here. So what does it mean then? This 1 2 um this 1 2 break of market structures are invalid now. Okay, they're invalid now. However, these 1 2, they are very much valid. So what do we do from here? What do we do from here? So we have to check the low of the macro structure. Did price come to it? No, price did not come to it yet. And then where's that low? Is this candle here? Okay, is this candle here? So what do we now have at the current price action? Then we have this low here. We started with a low. Remember, here we started with a high. So here, okay, let me help you with something again. When you start with a high and then expect a sell, when you start with a low, expect a buy. Okay, so this a low, this a high, and then we expect a lower low somewhere in this low of the macro structure. We expect a low to be formed here. uh, what okay, I wanted to do this. Yeah, so we expect price to come to this low here, and then after that we still have this candle, this order block here. It is not yet mitigated, so there's an imbalance below it. So that's one of the characteristics of an order block, and then we have to mark it as another point of interest right there. uh, as another point of interest. right there. So we now have a low and then we have a high, so expect a lower low to be formed here, and then after this mitigation, we expect price to come to this high here. So for a bullish, it will be the blue color. Yeah, so we still expect price to go up and mitigate this. Remember, I said we have a low here. So what then do you expect price to come and mitigate this low here? And then where's that? And then we have to drag this rectangle to our right. And then we still expect price again to come and mitigate here for a sell. That will be red as per the candle colors, my candle colors. Anyway, so we still expect price to come and mitigate here, and then after that price will move up again. So what do we have? We have a low, we have a high, we have a lower low, and then we have a higher high, and then this low will come and this low here will play an important role to push the price further high. So this is all that I'm expecting on NASDAQ, guys. So if we go to H4, in fact, before we go to H4, what do we currently have? What do we currently have? Let's do this. Let's zoom just once. Okay, so we have this low here, we have this high here. So price has not yet broken this low, and price did not trade again, did not change its direction to trade above this swing high here. Okay, I have to go back to full line now. So this is our swing high, and then this here is our swing low here. Okay, so either of the swing is either the swing low, the swing low or the swing high have to be broken, and then we'll take our entry from there. And then if it's like that, in the meantime, okay, let's go to H4. We'll go to H4 and check, do we have anything that's concrete, anything that we will take the trades from on NASDAQ. Uh, D1. Okay. We have this high, low, high, and then low, and then again this is a lower high here. Okay, low, high, lower high, and then the lower low here. So what then do we have? We now have the break of market structure right here. So the importance of this week come to play again. Yeah, all right. So the break of market structure is here, and then what do we do if things are like this? So we expect to enter price to enter to take ourselves from this week here. All right, so let's see if that did happen. This week here came to mitigate this week, and then price sold off from there. And then in the meantime, again, we have to check if ever we have an internal structure. An internal structure, yes, we do have. This is the internal structure here. So we expected price again to come and sell from here after this move up. So however, price did not sell from here, so it traded above it. Okay, so what do we have again here? We have a low here, we have a high, we have a lower low here. So what do you expect? You expect a higher high, and then that higher high must come to this low again, and then we buy it from there. But that is a wrong narrative. Why do I say that? because on D1 we already remember the D1 overalls all the smaller time frames below it. The D1 overrules all the small time frames below it. So on D1 we still expect price to come and break this low, and then according to our H4 chart, and then where we will be that, and then on H4 price it's currently on a range, and then how do we know what then should we expect? Where can we put a markup to say that price will go down there? Then we have to come to this internal swing low here. We have to come to this internal swing low. So what do you expect? To expect NASDAQ to come break this low, then after that push up and then sell from this week, and then after that again sell off to go and mitigate that low there. Then on D1 it will form that lower low, and then on M15 let's see then what do we have on M15. um let's see what do we have on M15. Let's see what we have on M15. I saw someone yesterday, one of those guys who just buy or sell. I don't know if they just buy or sell or they use whatever they're using. They caught this buy here. So I asked him, why did you buy there? How did you get how did you analyze that buy? So he said, no, the market was good, so I had to go to my chart and check why there was a buy here. So I saw this break of market structure here. Okay, I saw this break of market structure here. Remember guys, I always say if we have an order block, is either an internal low or internal high, or the normal order block, or the breaker block, price will always come to mitigate it, whether it's today or tomorrow or next month or next week or even next year. Price will always come to it. So we have this break of market structure here. So this high price did not come to it after the break here, so it moved far away from this higher. So if ever you are trading on M15, so you had to put your rectangle here and wait for price to come to it. So we have this swing low here, and then and then swing low here. Price did not come to it. So this high was formed on the 14th of February, but price came to it on the 16th of February. So this is where patience pays. So if you mark this, then you don't have to find anything to buy here. Always know that price will come here. Don't buy NASDAQ anywhere here because you will ban. And then why do I say that? I say that because we still have this high that needs to be mitigated. Let's say you saw this break of market structure here, so you are sure that again you have an internal break of market structure here. So price will come and mitigate this, and then it will uh, push the price high. So look at this week on its own, this week here, so it will have taken you out. Okay, so again you'll go to the low of the macro structure. This is the low of the macro structure here. So so you say, okay, here I lost the trades, but here I'm definitely sure. Then here price trade below your order block, so it becomes a breaker block. And then when it becomes a breaker block, what do? You have to wait for price to come into it to sell off. So here is the only place where you'll be right. So you have to wait for price to come to it to sell. So what's your point of interest? You don't have to look on the left because you already marked this. So price will come into this high. So this is a buy to sell, and then to buy again order. So that is what, this is where most people caught this NASDAQ yesterday, not this thing of trend line and MAs and all these things. I'm sorry if you use those, but I do not use those. I look at the chart as it is, so I go with the market. Okay, so I go with the price wherever it's going. So while we are on M50 now, I can go below this rather than to mark the most recent swing high, which is here, and the most recent swing low, which is here. So what do you expect now? Expect price to trade above this, and then that might be a buy. However, remember on D1 we still have an order block that is not yet mitigated down there. So if ever price trade above this, do not be quick to buy. Check that um, order block that will be formed after price will break here, and then when price come back to that order block that will be formed somewhere around there, should price trade above this, check is change of character. Is it a change of character or is it a continuous sell? If it is a continuous sell, then this would be your first entry, and then this here will be your second entry. Only if here you'll find a continuous sell, this will be your first entry, and then this down here will be your second entry. So you have to sell big time. This will be first sell, and then second sell, and then your third sell entry will be here. Okay, let me use this rectangle. In fact, so your third sell will be here, your third entry sell will be here after price broke below, after price break this order block here. So this will be your third entry. So you have 1, 2, 3, and then your take profit. Your take profit will be your take profit will, okay, yeah, another entry will be here after price breaks this, it will come back to mitigate it. So this will be your fourth entry. So this will be your take profit. So that is what I'm seeing on NASDAQ. I hope it's clear. I hope we all understand it, and happy good trading day. Enjoy the pips. Let me go back to my V75. Njabula here, sharp.